Good evening, everyone. Good evening, and welcome to this evening's presentation. The first thing I'd like to do, my name is Adam from Trade with Precision, and tonight we're going to be talking about market action, market analysis, and market movers. This is brought to you by myself, Adam from Trade with Precision, and ATFX. Now, can I just please do a quick sound check just to make sure that you can hear me? And that you can hear me loudly and clearly. If you don't mind, if you could give me some feedback by typing into the questions bar, just to let me know if you can do that, if you can hear me before we continue onwards. So thank you, I appreciate that very much. And so again, my name is Adam from Trade with Precision, and the first thing I need to do is give you an opportunity to read the disclaimer. Let me just double check, there's actually two, and I want to give you an opportunity to read the disclaimer. And while you're doing that, I'm going to tell you a little bit about myself. My name is Adam. I'm based in London in the United Kingdom, and I am a fund trader. And I'm also a trend trader. Now, usually most of my entries are on the daily as well as the 4-hourly time frame. And that usually means that classifies me as a swing trader. So that usually just means that I'm getting in on the 4-hourly and the daily timeframes, but I am also usually historically getting in on lower timeframes. So I just wanted to give you a sense of what the kind of trader that I'm. And we're going to be doing technical analysis this evening. We're not too concerned with fundamentals at this time, as in our decision to take trades is really based on market conditions and not necessarily on what we hear in the news. So on the agenda, thank you. Let's just have a look. Good evening. No worries, not at all, not a problem, just making sure you can hear me okay. Now, as it happens, I also happen to be looking after a puppy, so if you do hear some noise in the background, I apologize. It's just, unfortunately, my partner is not home yet, and she'll come and take him away from us when she gets here. So on the agenda, we're going to go and have a look at the charts. We'll look at the markets right now, and then what we can do is tie the market behavior to what we heard in the news. We're also going to do a global coverage of various markets and timeframes and identify any movers in the markets and promising trends, as well as highlighting any potential trading opportunities. So as I said, we are trend traders at Trade with Precision, so we are always trading in the direction of the market momentum. We're not contrarians. That is not statistically proven to be as profitable as trading with the trend. So we're going to focus on trading with the trend rather than against it. All right, and so what I'm going to do, excuse me, at this time is let's go across to the platform, and then I will come back in the last couple of minutes and finish up the last few slides. Okay, fantastic. Thanks for that feedback. Great. So just heading across to the platform here, and I'm just going to get rid of the back tester and the account stuff so we can have a look at this. And so I'm using the MT4 platform, whether you're familiar with it or not. Relatively straightforward, nice, reliable, stable platform. And what I'm going to be doing is having a look at a variety of different markets and just getting a sense of what kind of where the trading opportunities are at the moment. And I think it's very important as well to highlight which markets I want to be staying away from. I think that's a very important aspect of this, is which markets do I absolutely want to stay away from. And so usually what I'm going to do is I'll be looking at the higher time frames. This is the daily and the weekly. This will give me a set, excuse me, a sense of whether there's actually any opportunities, even, oh, sorry, on the low, even on the lower time frames. Sorry, I had a tickle in my throat. Obviously not taking a chance to breathe, talking too much. And just wanted to highlight that if the daily itself is not trending at all, then there are usually no money-making opportunities on the lower time frames. So what I'm going to do, first of all, is go through a chart just to find something here to prove my point. So if I go and look at Euro Aussie on the daily and then have a look at it, I could see that the market share for the last 5 or 6 candles really hasn't done very much. And so that immediately gives me an indication that on the lower time frames, it's going to be incredibly volatile. And so what I'm looking for ideally would be these types of trading conditions. I'm looking for very nice, strong moves, clear moves where the market direction is very, very clear, and looking to avoid it where there is no sort of clear direction and no winner between bears and bulls. So those are the kind of, that's what we would refer to as kind of untradable or not very profitable trading opportunities. The market simply doesn't have a sense of where it wants to go. Okay, and so that's really what I'm looking to avoid, and really do not want to get involved in any of those. So the question is if I see those kinds of conditions on the daily, it's usually an indication that there aren't even any intraday opportunities there. The best intraday opportunities will be in the markets where there is a very, very strong trend. So for example, if we have a look here, and let's just go through onto the daily and have a look at a few of these markets. Let's go and have a look at the indices as well, and then go down to the lower time frames. Let's say, for example, the 1 hour. There's a much stronger trend on this chart at the moment. It's also heading lower. We'll talk a little bit about the indices, the global indices as well, and as well as the daily. And then have a look at, say, gold and silver. Now, gold we've been waiting for gold to break out for a while. That's got a very, very nice trend at the moment. Very, very nice. These are the kind of conditions that I'm going to prefer to get involved in. Daily has a good trend. It's trending upwards. The weekly has a very nice, strong trend. It is potentially a little overextended. And the monthly certainly is going to give me a sense of where my levels are. So can I kind of do a little bit of a survey just to see how many of you are sort of new to trading? And what I mean by new is possibly in your first 6 months of trading. And then secondly, I'm always interested in people or individuals who've been maybe looking at trading for a couple of years, bits and pieces, and haven't necessarily, I mean, one of the ways in which we're looking to, or how this particular webinar is ideal or suited for people who are potentially looking to achieve more consistency in their trading results. So we are technical traders. What does that mean? It means we look at price action. It means that we look for and we follow the existing trends. Also means that we then make sure that we take advantage of these key levels, support resistance levels, very, very important. What is wrong with you? Okay, come here. Anyway, sorry about that. So, and so gold is a great example of its behavior, and I always find it interesting as to what is going to be the trigger, because technically we knew that gold was looking to break through this level. It's a very bullish breakout pattern, and we know that the next key level is likely to be 1560. That's a nice round number, so likely to be in this area where gold actually encounters its next level of resistance. But it was always interesting because we were looking at gold for a breakout even going back to last year, or even in fact tail end of 2017. We knew that this particular pattern was looking particularly bullish, and therefore there was likely to be a breakout. And at that time, we were looking for somewhere around about this period of time where we expected that breakout to occur. We've subsequently had that breakout, and now price is heading up to its next key level. All right, and so this is really what we're looking for, is trading opportunities. The next thing that I'll be looking for as well, I'd really be happy if gold did come back and test this level. So if gold does break through this level of resistance and come back and retest it, I'll absolutely be looking for an opportunity to get back in as price heads up higher. So if we do get a pullback, that'll be great. We'll see what the reaction is against this level, but certainly, and certainly on a weekly or daily basis, I'm looking to see price pull back into the particular zone. So let's go and have a look at the, I'm just going to clean this chart up a bit and take a bit of a breather. There we go. And so what I'm going to be looking for ideally is for price to, this would be first prize, is to have price pull back to that particular level. Second prize would be to have price pull back in towards the moving averages, anywhere in this area. And that's actually its next level. And then looking for that trend to continue. So we've got an uptrend on the monthly, uptrend on the weekly, uptrend on the daily. And so gold is currently just one of the better examples of a good tradable chart. And as trend traders, one of the beauties, one of the things I really love about being a trend trader and the way in which you do it at Trade with Precision is we are much more interested in the market conditions than we are in what the instrument is that we're trading. All right, that's a very liberating approach. It means that you're not going to find us trading euro dollar if it's not going anywhere. You're not going to find us trading the indices if they're not trending. You're going to find us trading anything that's actually moving, which could end up being a commodity. 1 week, it can end up being a particular currency, series of currency pairs, maybe the yen charts the next week. and so on. But we're going to be following where the markets are clearly moving, where there's a clear sense of direction. And that brings us a lot less frustration and generally sort of better results in terms of returns. So I just wanted to start you off with gold to give you a sense of the kind of conditions I'm having a look at. And so what I'm going to do next is let's run through the currencies. And I'm just going to start off with a blank chart and go and have a look at the currency market. So starting off really just with a very, very simple, straightforward approach. And getting a sense of what's going on in the market. So we're going to be focusing on price action for a little bit. And so we look at euro dollar. All right, I want to get a sense of what's going on. Another thing that a lot of individuals don't often appreciate is that the US economy, so let's just put aside for the moment that the last few presidents they've had, aside from Obama, and this is a personal opinion of mine, this is not necessarily that of Trade with Precisions or ATFXs, but that, you know, despite the presidents they have, or perhaps our opinions of America, the economy is absolutely huge. The US dollar is involved in 90% of the transactions on the planet. Their GDP is the biggest at 19 trillion. The next closest is China at 13 trillion, and the UK sits at 2.7 trillion. So really, we were just much smaller than that. So we do need to have at least an awareness, as well as an sort of a strategic respect for their impact on the markets. And that would include the currency markets, as well as you can see on the global indices and the equity markets. So I'm just looking here at euro dollar. What I'm trying to do is get a sense of what is the state of the US dollar at the moment. Is it bullish? Is it bearish? And a lot of the times we forget that the US dollar can actually move pretty much, and if it decides where it wants to go, then everybody else will just kind of move out of its way. And so if we see both the euro dollar heading lower, we see GBP dollar heading lower, we see Aussie dollar heading lower, and so on, that's usually an indication that the dollar itself is actually what's driving the market, as opposed to that. So let's go look at GBP. Let's look at that, and we can see obviously cable is quite weak now. Certainly Brexit and the buffoonery that is our current sort of government and Houses of Parliament. And I know if I sound largely negative, it's because I'm very frustrated. I'm not really seeing much professionalism or success in a lot of government parties, so just kind of a bit frustrated with that. I apologize. But just also highlighting that we do certainly have a weaker pound. So I'm noticing the pound is heading lower, the euro is heading lower, and I'm going to compare it to, say, the Australian dollar. So the Australian dollar is also looking relatively weak. And randomly, I thought I would just highlight to you, this is just a little bit of random trivia, but when you get this very, very orderly behavior where it's almost like soldiers marching in a line, that can often be institutional purchase. Okay, so this could be the result. It's just very, very orderly, and it could very well be, I'm just highlighting, it could very well be an actual institution of sorts, or banks, or someone just doing some purchasing there, because that order is just so formal. So we're seeing a bit of a weak Australian dollar here. Let me compare it to the Kiwi dollars. The Kiwi dollar also hitting lower. So this implies that right now, just at least in the last few days, at least, we've got a stronger US dollar. A stronger US dollar. And so that implies that the dollar is pretty much driving everything. And also what I want to be doing is focusing on the weaker currencies, the ones with the best trends. Because obviously when we get candles like this, we can see that this is usually the case with news announcements. So there was likely some Kiwi interest rate, for example, or any kind of event. If I'm just looking at it technically without checking the calendars, that's usually the kind of behavior that we would get with some form of economic calendar news. So let's go back and have a look at this. We've got euro dollar at the moment is struggling. You can see that behavior. They're struggling to get back over the line. But now that we've looked at cable, as well as the Aussie dollar, as well as the Kiwi dollar, we can see that it's probably the US dollar that's driving the rest of them lower. So they can be weak or strong on their own. And cable, which is GBP, okay, sterling against US dollar, is certainly looking weak. So I'm quite keen to look for trading opportunities with the weakest currencies against the strongest currencies. That's generally where you might get the best looking trends. And this one looks pretty good. So there's some really nice, this is what we refer to as optimal price action. Okay, so this has got a very clear trend, and very, very strong direction. And that's where I'm going to be looking for most of my opportunities. Okay, so let's just go through and get rid of this, because if I keep changing the currency pairs, it's going to come back up on that. So at the moment, stronger US dollar. And then often there's a thinking of, well, isn't there a correlation between US dollar strength or the equity market, stock markets, don't they go higher on dollar strength or weakness? And actually, they're not. There isn't. Although on occasion they can be in sync or out of sync with each other or inversely correlated, there is no fixed rule. And it's very important to understand that you can get a strong euro economy and a strong pound, and you can still have the euro GBP trend going one way. You can have a strong US dollar and a strong euro and a strong pound. You can have strong stock markets and a strong currency. You can get all of those. There is no fixed rule. There might often be a bit of difficulty in the way that they do that, because there is some causal relationship, but it's not unbreakable. All right, and actually, if you start to be able to overlap curves, you'll be able to see that you can easily get a strong dollar and a strong stock market, and a weak dollar and a strong stock market. So you can get anything. It's just worthwhile highlighting that, because that shapes the way we think. It shapes the way we think, and then it changes our decisions. And as technical traders, our decisions are purely, what is the chart looking like and what am I going to trade? So which direction? And that's the thing, is I might be seeing a weak euro and then decide I've heard something in the news and actually I should be buying. And then the market keeps going down, which it was looking like it was doing, and that causes losses in trades. So pretty much one of the single biggest causes of traders, technical traders, losing money in their early years is the media, listening to the news and having that impact their decision. And especially when they go against the technicals, they keep waiting for the technicals to respond to the news. And actually, we don't really do that. As technical traders, we'll just do what the charts tell us. So just wanted to demonstrate that by looking at a few of these key ones here. So the next thing that I'm going to do, because I want to cover all the currencies properly, the next thing that I'm going to do is I'm going to go through the currency pairs looking for and look for correlation between those. I'm just going to do this quickly. Okay, cool. So I'm going to go through this and look for correlations. And so I'm going to start with the euro pairs. Okay, so this is the state of the euro dollar. It's not trending overall. You can see that if you look at it, it's not as weak against the US dollar as the pound is. The pound is clearly hitting lower. And what I want to do here is I can see largely the market is going sideways. If I compare that to the other euro pairs, so this is what I'm going to do now, look at euro Aussie. And what I'm looking to see is there perhaps an underlying trend with all of the euro cross pairs? And if that's the case, then I know what is the state of the euro dollar. And you can see here, we've got euro dollar going one way. We've got euro Aussie going up. We've got euro CAD largely going sideways here for a bit. Let's look at euro Swissy. Now look at that. That is absolutely beautiful. So if I, as a trader, was going to trade a trend, this is looking magnificent. This is a great chart looking for opportunities to short to the downside. This shows that obviously the euro is weakening against the Swiss franc, or the Swiss franc is weakening against that. But so far, the other thing that's happened is there hasn't really been a clear direction or a common direction with the euro pairs. And what that really tells me is that the euro isn't really going anywhere at the moment. All right, a lot of the moves that are impacting the euro are probably to do with the other pair. So if you look at euro GBP has been climbing a lot, and that makes sense because we've seen the euro is not going anywhere, but the pound has been weakening. And so that tells me that that makes sense that the euro would climb against the pound. Let's look at euro yen. Euro yen is heading a bit lower, so that's interesting. Euro Swissy, euro yen heading lower. Let's look at euro kiwi, and euro kiwi is heading higher. So in this particular case, all right, if we look at the euro pairs, I've seen a few that I would definitely put onto my watch list. So this is what I'm going to do, is just create that watch list. And these are the markets that I'm going to be focusing on, not only for swing trades, but day trades. Right, I really like the look of euro Swissy. I like the look of euro yen. That's all good. And so those are the ones initially that I quite like the look of, because they have the clearest, strongest trends. Now, Let's go have a look at the GBP pairs. Sterling dollar looks very good. Let's compare the difference. If I go look at pound Aussie, is it heading down? Is it heading sideways? It is currently heading sideways. Oh, so thank you. So yeah, it's and she's gone, it's now going sideways. So if we then have a look at this, we've got, especially in this area, there's no clear direction at the moment. What that tells me is the pound is weakening, but the Australian dollar is also weakening, and therefore they're kind of canceling each other out. If I go and look down on the lower time frames, again, I can see not very well, it doesn't look great, but there isn't really a clear direction for the market here. And again, even looking at this patch here recently, there's even on the lower time frames down to the 1 hour time frame, there's no clear direction here. So just by looking at the daily, we can really get a sense of whether there are any tradable opportunities on the lower time frame. Okay, so let's go back up to that daily. So let's have a look then. Might as well look at pound Kiwi, see if that's similar. So pound Kiwi. Okay, pound Kiwi is climbing up a little bit. So there's also the same case there where pound Aussie and pound Kiwi climbing a little bit in the last 20 or 30 candles. Not really liking the look of it just yet. Let's go and have a look at some of the other pairs. So pound CAD heading lower. You can see here, and if you're interested, when you can see signs of when the market is looking to take a break and turn around, we've gone from this low down to this low, down to this low, down to this low. So there's relatively strong fresh lows, but since this low over here, we've gone a very short distance to this low and an even shorter distance to this one. So what's actually happening is the market breaks to a fresh low, immediately pulls back, goes to a slightly shallower low, and basically it's losing speed. Okay, it's not going as aggressively as it was here. These are quite sharp moves to the downside. Now it just goes a little bit below the previous low, a little bit below this one, and then it kind of pulls back again. So this is likely to be wanting to do a weekly retracement. Okay, so if we just draw a line in here from there, just to connect that, imagine that was my moving averages. What's actually happening here is that on the higher time frame, the weekly has actually gone a very long time without pulling back. It's been running and running and running, and it's actually overextended to the downside. And this is actually relevant because what I'm going to do is throw in, actually we'll go look at a different chart. So let's go look at this one, for example. So I'm going to throw pound CAD onto this chart here and go look at it on a weekly basis. And you can actually see that price is quite far from the moving averages. So it's exactly the same chart. I've just thrown on some moving averages and it's a different color. And actually price has just gone a long way without connecting with these moving averages. So really, really strong trends will often come back and interact with that. If you go look at it on a daily basis, you can see with these beautiful trends, these are really, really nice trends lately. We get this price will come back to the moving averages and then head away, come back, head away, come back. And the 10 and 20 together as a kind of as an area is a really good indication of value. So where does the market feel that the actual value is? So imagine that the houses in your street have gone up and obviously very overpriced, and they come back down to a price level that feels much more reasonable. And then the market picks up again and so on and so forth. At this point, the market has just become very overextended on that weekly time frame and is actually now due to pull back into these moving averages. So my expectation is to see that the market will likely come back at least or potentially to this particular level. And so that means that during that period when it's heading back up here, that means the daily in its journey up to that level will probably go into an uptrend. When it gets to that level, it will then be free to resume the longer term downtrend. So basically every time frame has this breathing out, breathing in, overextension. Anyway, and our best trading opportunities as trend traders come when the higher time frames are going in the same direction. So it's great when the weekly is going down and the daily is going down, and then usually the 4 hourly is going down. So if you look during these patches here, as well as let's just say that patch there, if we go down to the lower time frames, there was some good trading opportunities on those lower time frames. So let's go and just give me the opportunity to do this. And these opportunities exist during those periods. So I'm looking for that there and there and there, and this will happen. So lots of intraday traders will be taking advantage of the same trend as traders on the 4-hourly time frame are taking advantage of it here, as well as daily traders, swing traders, taking advantage of the trades on the same time. So effectively that's when you get your best trends. And at the moment and recently, you can see that certainly I'm looking for Control B. There we go. Just want to get rid of these two things here. This is where there've been some really good trends lately. Sort of pound Aussie, largely trending down. We've had a weaker pound. We've had pound CAD, pound Swissy is also, look at that, pound Swissy is beautiful, 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 really, really nice, strong, clear trend. This is the kind of trend that we'll be looking for. So as soon as you see it moving, and even in these patches here, that's intraday, that's really good money for intraday traders. Strong, clear trends, I beg your pardon, pound yen. So this is pound yen also. So you can see that the similarity between the GBP charts, largely speaking, heading lower, but certainly pound yen, pound Swissy, pound CAD, it's very, very strong. And clearly the pound has been weakening against that. And then if we go back to Euro GBP and put that on, we could see that the pound has been going the other way because it's on the other side of the two currency pairs here. Okay, so it's and so the GBP has been incredibly good. It's certainly coming, and it's a bit frustrating for beginner traders. They go, I finally found a good trend, but I'm going to get in it and it's going to be done. It's going to be finished. And that is potentially the case. We've got here where the weekly charts are now overdue for a pullback. They need to have their pullback. Okay, so they're likely to come in. There's a nice little bit of a level there, and then we've got a bit of a level of support and resistance over here. So let's put that in. So it's potentially going to come back into this area before the weekly potentially continues on. And again, if we go and have a look at some of these other ones, so pound Aussie, let's just bring that back. Hasn't really gone anywhere, but we'll look at pound CAD. Pound CAD needs to come back up to its level. Pound Swissy is down here. It's most likely going to come back into around about this area. There's some really nice strong support resistance levels there. So that's a good area for it to come back to. Pound yen is also likely to come back into some areas around about that area. Let's call it that, support resistance levels. So potential pullback into that on those weekly timeframes, and then they can decide whether they want to continue hitting lower or not. So it means, as a practical trading exercise, these can go on my watch list. If I'm going to continue to trade them now to the downside, I'm going to be cautious because I can tell the weekly is getting a bit overextended. It's overreaching. At some point, that weekly in the next couple of weeks, which is in the next 5 to 10 trading days, is going to come back. So I'm just, it could still go a little bit lower, but most of them are kind of showing signs, a bit of a green candle. So what we look for is it's gone from red candles to a green candle here. And a green candle would be the first sign when the weekly, when Friday comes, this Friday, that would be the first sign of a potential turnaround. So we'd get a green candle by Friday, and then next week, Monday, Tuesday would break up above the high, and then we'd have our swing low. So I'm cautious about that, but it also doesn't mean that why not in about a month's time, maybe 6 weeks time, prices retraced back into here. There's a nice bearish weekly candle, and then I can start looking for entry opportunities to the downside again. Okay, so that means that these things can sit on my watch list, and the next time, if I don't trade them now, the next time there'll be lots of opportunities on them is probably going to be somewhere around October. Okay, call it not September, not a month from now, probably start of October, right? And then looking for those opportunities. So that's what I wanted to show you, was looking at the GBP pairs. Let's go over to have a look at a few more of these charts on the daily. So we can see the GBP pairs are inherently weak. So if I'm at the dinner table and everyone says to me, what's going on? I can say, well, we don't really know what's going on at all because we're being so misled. But what I can say is that the pound is definitely weakening. Right, there's no doubt about it. By the way, doesn't mean that it's going to keep weakening forever. It just means that at least for the foreseeable month or two, my expectation is reasonably that it will continue to weaken, but it's also due for it to come back, maybe a 50% retracement, 38 or a 50% retracement, and then it'll resume. Okay, so, but it does mean that likely in about 8 or 9 weeks, it'll be heading back down, and then it'll decide what it's going to do. So I've looked at all the GBP pairs. The next ones on my list, let's go and have a look at the Aussie pairs. So I'll start with Aussie Kiwi. Is there perhaps an underlying trend with Aussie Kiwi? Not really seeing anything yet. Let's go and have a look at Aussie CAD. Aussie CAD has obviously been heading a lot lower. So interesting, because we saw Euro CAD was going lower. At one point we saw Pound CAD was definitely heading lower. Aussie CAD looked as though that was very much heading lower. Out of curiosity, what's Kiwi CAD doing? Just want to compare them. Kiwi CAD also heading lower. So that just also tells me that it isn't just GBP that has some kind of correlation to it. There's also a few other, there's potentially CAD has got correlation. So let's come back to that in a moment. Aussie CAD looking nice and weak at the moment, a little bit overextended. Let's look at Aussie Swissy. Aussie Swissy, wait for it to refresh, also looking a bit nice and bearish. So that's interesting to me, because we've seen CAD and Swissy pairs and a lot of the crosses trending quite strong. So it isn't just GBP that's trending, it's also CAD and Swissy pairs. Let's look at Aussie Yen and see if that's also heading down. There we go. So what did we see here? We saw Pound CAD, we saw Pound Swissy, and we saw Pound Yen all heading down. Now we see Aussie Swissy, Aussie CAD, and Aussie Yen all looking quite bearish. Out of interest, what's happening with Euro Yen? Was there a trend there? What's happening with Euro Yen? Yep, Euro Yen trending down. So this is telling me that, okay, the Yen charts are also worth looking at. Okay, so we'll go and have a look at those in a moment. But it's drawing, what I'm looking for here, ladies and gentlemen, is correlation. I'm looking for, is there a pattern? Is there a particular instrument that has a definite direction? Because it's a safer way for me to trade if I'm trading with the crowd, so to speak. So, or trading with kind of the way I said is different groups of animals on the plain in Africa. So you've got buck and you've got zebra and you've got giraffes and stuff, and they're all different. But if one of them spots a predator, then they all start running. So my question is there that kind of a correlation here between these pairs? So it seems to me that Aussie CAD, Aussie Swiss, Aussie Yen have potential opportunities. Aussie Kiwi's not going anywhere. Let's have a look at Kiwi CAD. Okay, looking more bearish. Okay, a little bit overextended. Let's come back to Kiwi CAD quickly. So Kiwi CAD looks very much as though that's quite keen to sort of come back into about this area here and test it for resistance. That's fine. And these things will just show up the next time I want to do it. In fact, I'm being silly here because I can use the drawing tools. Yay! So I can use a highlighter and I can highlight. Okay, so there's my area. In fact, I think I could draw a straight line. Cool. All right, so we'll do it that way. Then let's go through and have a look at these ones. So what's going on with Kiwi Swissy? So Kiwi Swissy also looks a little bit overextended away from those moving averages. If we compare it on the charts with the moving averages and throw Kiwi Swissy in there, you can see also a bit overextended away from these moving averages, certainly on the weekly. So we're going to need a bit of a deeper pullback on that, but this also looks good. You know, this kind of thing can look really good on the 4-hourly timeframes, really good entry opportunities from the moving averages. Now, as traders, all right, so what do we do as traders? Well, as traders, it's very important to understand that trading the markets using technical analysis is just a skill. It's a learnable skill, like learning a language or a musical instrument or maybe a professional sport. It's a completely learnable skill, but people misunderstand it. They confuse trading and investing. Investing is when you buy a house that you want to live in, or maybe you buy some stocks, or you have a pension. Those are kind of investment approaches, and all of those involve long periods of time where value will just accumulate over time, hopefully. It used to be pretty much guaranteed or a given, whereas nowadays we don't really know. And trading is very much like the idea of having maybe a second job or an extra job where you earn income so that you can earn some extra cash so that you can then put that towards maybe investing in a property or finding other ways to generate cash to use for investment purposes. And that's all it really is. So trading is meant to be getting in out of the markets on a minutes or hourly or daily basis to generate profits that can then go towards longer term investments. And it's very important. And the reason I'm stopping and talking about that is because people forget to actually take profits. As traders, we don't expect markets or trends to run forever. We're not trying to get the whole move. Traders will generally, if I draw in on this one, traders will generally look for 3-to-1 trades. So what does that mean? It means that if my entry is here and my stop loss is there, I'm looking for 1, 2, or 3 times that distance on average per trade. That's it. Nothing ridiculous, nothing more than that. If I get 2-to-1, I'm still happy. If I get 4-to-1, I'm very happy, 5-to-1. But the number of 1-to-1 trades where the market goes, if that's my entry and it only goes 1-to-1, number of 1-to-1 trades are very common. They occur in every market on multiple time frames, probably hundreds of times a day across all the markets, okay, not just in the currency markets or something. So they occur a lot. 2-to-1s happen a fraction of that time, and 3-to-1s even less, and it becomes exponentially smaller, the number of opportunities. So the fact that this one here with a nice entry and a stop loss there yields about 1, 2, 3, 4, 4-to-1, and this one probably here does about 2, 3, maybe 3-to-1, maybe 4-to-1. Those are above average, and we can't predict those. We can't always say that that's going to happen. So in amongst it, we'll get a few where we get triggered in and stopped out. Okay, so here's the setup here. There's my entry. There's my stop loss. I get triggered in here and I get stopped out with this candle. I then get another entry here and another potential trade. I'm going to put my stop loss up there, and that one goes on to make its money back. So we do get losing trades in amongst those setups because nothing is guaranteed. But the point is that traders must take money off the table. And traders who don't trade with stop losses and who don't take money off the table ultimately just never succeed. So taking profit is the only way to actually grow our accounts. We can't do that. And a lot of people try to ride out the trends, and it doesn't work that way. Professionals don't ride out the trends. They'll get back in, or they'll take some of the profit off the table, but they won't take nothing off and just hope that it'll go on, which is why traders who were trading Bitcoin were probably fine. They might have left some money on the table, but they definitely came away with more than they left. Whereas usually the amateurs just kept thinking it was going to go and go and go. And then, of course, they ended up with nothing. And so they were billionaires on paper. Can you imagine that? So that's a very important lesson to remember as traders, and so it's how we behave. So I wanted to show you that. So intraday traders and day traders are going to be taking advantage of those trends on multiple time frames. So next up, let's go and have a look at dollar CAD. So the reason I bring this chart up is to get you to just look at the price action to see that trend, to understand the difference. So let's look at dollar CAD. So dollar CAD is very interesting because dollar CAD is not trending as nicely. It's going up. When we compare that to Kiwi CAD, which is trending down, Aussie CAD, which is trending down, Pound CAD, which is trending down. So that just tells us that then it's kind of up to whatever's happening with the other existing partners. Dollar Swissy is, wait for it to refresh, certainly looking quite nice and weak, but I'm not a fan of these particular trends. Let's look at dollar yen as well. So this is dollar yen. Dollar yen is looking nice and bearish. But if I had to choose of the batches we've got, I'm going to be focusing on the best quality trends. Pound yen, okay, Aussie yen potentially, or Kiwi yen as well. Kiwi yen looking nice and bearish. Those are strong, strong trends to the downside. And lastly, let's have a look at some of the CAD charts. You got CAD Swissy, okay, heading a bit lower, but not looking as pretty as the rest. We've got CAD yen. Okay, I gotta wait for that to refresh. Doesn't look as good. So CAD Swissy and CAD yen, because you've got basically CAD Swissy and yen competing with each other. How's Swissy yen doing? Okay, and this actually kind of makes sense because the Swissy pairs and the yen pairs are all heading down. They're kind of canceling each other out now. So this patch is going to be very volatile for trading. If you look at it on a weekly basis, you'll see here for the last kind of 10 or 12 weeks, the market's not really going anywhere. The daily, not really going anywhere. And certainly the 4 hourly is going to be just a mess. Okay, it's going to be very volatile and is completely untradeable. So it doesn't really matter what your strategy is. The conditions have to be amenable to trades, so to trading. Right, I'd be very surprised if someone was predictably or reliably making money in these conditions. But computers can do very well in these kind of conditions because they can trade noise really well, but people, no. Okay, let's have a look at dollar Sing. So this is Singapore dollar. Let's go back up to the daily there and just have a look at it so we can see here we're getting a stronger dollar. Dollar Sing is a great kind of a cheat to get a sense of what's happening with the US dollar overall. It's very similar in its behavior to the US dollar in general, as opposed to just the US dollar against the euro. So we can see that that's going quite well. And in fact, again, here, there's going to be patches. If we go to this chart again, have a look at this, throw on dollar Sing. Again, there's some potential trading opportunities on that 4-hour time frame there. So these are the kind of conditions I'm looking for those trading opportunities. And so basically, this means that on my trading list, I might look at JPY, CAD, and CHF crosses, comma, and Singapore dollar. Okay, so USD, Singapore dollar. And it's interesting because even when I was learning how to trade 8 or 9 years ago, cheap as yeah, maybe even 10 years ago, Singapore dollar, Danish kroner, there were a few that were being traded back then. Although we don't often trade them these days, they're fine. There are potential opportunities there. And so the only reason I would stray from the first kind of 28 pairs is when there are clearly no opportunities, and it happens. Sometimes there's just nothing going on in the currency markets, but they have been trending a lot, I think, the last 6 months, certainly this year. But last year, I can recall patches of last year, very few patches where they moved. So having had a look at the currency pairs, Aussie, the yen, and CAD, there's quite a few of those. Some of them a little bit overextended, but they've been trending really well, and I'll keep an eye on those. Next up is going to have a look at the, let's have a look at these commodities very quickly. So we've got silver, gold, we've got metals, and we've got oil. And let's quickly go and have a look at that. So let's look at, we've looked at gold, but let's have a look at gold again. Really liking the trends over here. Okay, there's some opportunities on as great on the lower time frame, so the daily looks really nice. And it's definitely coming into its resistance level up there. So if I was going to be looking for tradable opportunities from here to there, I would have to be a little bit cautious because I want to get out just below that level. I'm going to want to get out just there, which leaves me with very few opportunities. So down to say 30-minute time frame, that's my kind of window if I'm looking for that. And I want this kind of quality trend. I'm looking for a really nice trend, and it would have to be up to there, and I'll probably make sure I'm out at that time, which is close to, what's that price level there? 15.55, start cutting out there. Otherwise, just wait for it to hit the reaction and then look for opportunities when it takes it, comes back down to the bottom. So these have been the best trends we've had in the last couple of months. Okay. So that's fine. Let's have a look. What does silver look like if we compare that? What's going on with silver? And silver is also trending very, very well. Okay. Certainly looking at it, it's been quite messy in recent years. It's not as appealing as gold. It's in a beautiful uptrend here. I want to be aware of these key levels. So there's a very important level right there. What have we got before that? What have we got before that? Potentially, let's just go through, just see if there's anything there. Yeah, that's going to be the gist of it. So pretty much where it is now, it's got a lot of room to head up a little bit higher, and so that also means some potential opportunities there until it gets up to that next key level. Cool. Now let's go through and just get rid of all these horizontal levels. Boom, 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 boom. Cool. And next, let's have a look at oil. So we'll start with US oil. Get a sense of that. What's going on the weekly? You can actually see there's quite a bit of trouble here in terms of the direction. There's not too much of a sense of direction as to what's going on at the moment. Okay, there's a bit of support there. We're going from a high down to a low, up to a high, then to a higher low, but then a lower high, and then a lower low. So there's no clear direction here at all. Go and have a look at it on a monthly. Okay, so again, no clear direction at the moment. Here we had a very nice uptrend. Now we have no clear direction. So when I talk about conditions that are not really attractive for trading opportunities, that would be that's kind of the situation at the moment. If I look at it on the daily, it's a mess. Okay, it's more bearish than bullish, but it's not a clean, strong trend. Let's compare that to UK oil. Okay, so UK oil is looking bearish. It's actually producing a potential shorting opportunity here, meaning Nice little level of support and resistance up there. And there's also another level just below that. Let's have a look here. There's another one there. You can just see that this behavior here I'm looking at there, and a bit of resistance up there. Anyway, so it's setting up as a potential shorting opportunity should tomorrow break the low of today's candle. This is then likely to continue down, and there's a big key level down here. So we're likely to see UK oil trade lower. So if someone stuck a gun to my head and said, you've got nothing else to trade something, then I would certainly consider trading this to the downside. But I would want to see how it closes tonight and see it break the low of that before I look for any opportunities to trade it lower. Okay, so looking at that on a 4-hourly time frame, this current uptrend of high lows, high highs will then start to go into a downtrend. So what I would be looking for is for price to produce lower highs and start looking for those opportunities. And a really nice entry point would be potentially that's there or there. Okay, and I could look to align those if they happen with a support resistance level. Then it's a really good spot. And so that's an opportunity there. Let me clear those up again. Okay, let's go back up to the daily. So basically, oil's looking weak, but not trending very, very well. Silver's looking nice and bullish and has some potential room to go. It's actually got more room to go than gold, and gold has got a little bit of room to go before it hits it's very overextended, and before it hits its next big ceiling. And it's probably, my expectation is to see it come back down after that, at least in the shorter term. So maybe we'll see cable strengthen temporarily, the GBP strengthen, and then see gold weaken temporarily, and then they'll about the same period of time, gold will resume its uptrend and cable will resume, or GBP will resume its downtrend. So that's the currency markets over there. That shows some opportunities. Now let's go and have a look at the global indices. Again, I want to go and just remove these vertical levels. I'm just going to delete all these things. What are these things? Boom. And let's go and have a look. We start with the US ones. So I want to get a sense of what's going on in the US markets, because the US markets are so big that if they have a hit, we take it. Now, I just wanted you to notice, what I would really like you to notice is, we had such a big, strong move. The markets have just been unable to create fresh highs here. Right, so they're just getting a little bit higher and coming back, trying again and coming back. The market's actually exhausted. It's very much exhausted, and it has two choices. It can either, all right, have a big correction, which will be, from this perspective, actually not so bad. But in terms of the news and the media, it's going to be a year or so maybe before it recovers. It's going to be very scary, because that distance that the market has to go is going to look a very, very long way. If we kind of zoom out, you can see how far the market has to go. And all it's going to do is give back. And this is, in my mind, is a worst case scenario. It's a worst case scenario that the market will head down to these levels. I think it's much more likely that the market will find some support. And this, by the way, is when the market it's normal. The market, you've all experienced this. We get a recession or a correction. The media will be very dramatic about it. And everyone will be saying, I told you so, I told you so. But actually, it happens it's going to happen within every 10-year cycle. So it's fine if that happens. Alternatively, the market will come back, find support in these areas here, somewhere in this area, somewhere, find support, and it can ping pong around in the same way that it did during 2018. That's effectively 2018. And this is 2019. And so we just get this volatility while the market goes sideways for another 6 to 18 months. And it either goes down or it goes sideways, and then it recovers. It's had a breather. It's had a breather. It's taken a rest, and now it's ready to continue up. And so those are the two options that we have. Now, if that's what's going to be the case here, then so be it. We're going to be fine. It's kind of a natural process. It's like a winter versus a summer. You just get the plants dying and the trees dying or whatever, and then spring comes and everything's fine. So that's what we're seeing on the weekly. We can see price coming back into the moving averages. But clearly the market is not in the same state that it was here. It is, and it's looking more and more bearish. So it's looking more and more like we're going to see the market head into, sorry, actually let's do it another way. Let's do it this way. Let's draw this in, but very much into this area here. Okay, just that area there, pretty much. Worst case scenario, it'll come down to about this area here. And that'll be a similar type of correction. I know that drawing is horrible. Please excuse it. So it'll do that down to this level here. Now, let's go and compare that to a few of the other markets. We've got the NASDAQ. This is the tech industry. That is also struggling a little bit there. And again, they have their key levels at about that point, okay, and their key levels also at about this point. So the market's going to find a floor there or there, okay, and it's going to look potentially bad in the media, but it's not so bad. There are a lot of bulls in the market, but at the same time, it feels as though not everybody, like if I talk to people on the street or anyone in passing in the queue for a coffee or at work in the office or wherever, at the dinner table chatting to friends, it doesn't really feel to me like everybody is having a great financial time the last few years. So the markets are growing, but it doesn't really feel as though that is dripping through to a lot of people. And so it's potentially that the market actually is just got no more growth in it. It needs to basically have a recession, have a breather, trim the fat, and then get back on it. This is like, I'm not a qualified economist, but that's kind of my gut feel. That's my sort of anecdotal opinion on it. Then we have got the S&P 500. S&P 500 is actually looking, it's kind of corrected a bit, coming back down, same thing. So you could see the similarities between the different US markets and the different levels that they could potentially come down to. These are the levels I'm going to be watching. If I have spare cash around, I'll be prepared to buy at those levels on particular stocks, for example, but with the understanding that if I decide to buy something at this level, with the understanding that it could still go lower. All right, it's not going to, I don't think it's going to go much lower than that, but I would be very, very kind of understanding if it came down at least to this level. It may head lower, we'll see. I mean, it is, but I'm trying to be kind of more optimistic than anything else. Down to this level makes the most sense. Down to this level is absolutely fantastic. Let the market go sideways for a few years and carry on. So having said that, let's get rid of these lines again, and let's go and have a look at some of the other markets because we're doing well in terms of that. So if we want to compare that, go and have a look at the FTSE. We haven't had as much growth as the US. We just haven't had that same thing. We've actually been stuck for decades below this kind of level here, that sort of 7,000 level. And if the US has a big correction like that, we will come back below that 7,000 level and be back in this area again. And that's fine because we haven't had the same kind of growth. We only just broke out of these previous highs that we've been in for years. The US went to fresh highs in 2010. So they've had so much growth. In fact, the most growth that I could see almost around the world has been out of the US market. So comparing that, my expectation is, and you can see it's not clear for traders, this is incredibly dangerous trading territory. A lot of amateur traders are looking to short the market, but the market is going to keep bouncing. As it hits these buy levels, you've got institutions buying, so it's going to bounce like dead cat bounce, just keep bouncing and bouncing and heading lower. It's going to do it very fast. And it's going to feel, in a way we can short the market, but we have to understand we have to take profits. And most people do the same thing here. They did mistake they make with Bitcoin. They start selling, they get a bit of money, they're doing very well, but they don't take profits. And then the market hits a level, and within minutes it's bounced all the way back up, and then they're stuck in a trade the wrong way. So with traders, we've got to have a plan. We're looking for a nice strong trend to the downside and looking for those shorting opportunities. Okay, and then if we go ahead and just compare that, so let's have a look at the DAX. The DAX is now starting to head lower as well. It's broken its weekly uptrend. Okay, overall, it's looking more and more bearish, starting to head lower. Let's look at the French CAC. That's also really clearly struggling with resistance there, and potentially now starting to head lower. So we can attribute it to Trump or whatever, but we were going to get this at some stage anyway. No matter who the president in the US was, no matter the reason, we were going to get to a point where the market can't go any higher and needs to correct. It's a normal cycle in nature. And looking at the Nikkei here, so this is the Japanese 225. That also is getting ready to break that level and head lower. We've got the Hong Kong, the Hang Seng. Okay, that one also now looking nice and bearish. And then the Australian one, which has actually been doing really well, has corrected and coming back in. So I'll be looking to see what happens when it gets back down to this level. But the Australian market has, the ASIC has been performing incredibly well. So basically, to sum up with the indices, I'm incredibly cautious. I'll either be staying away or very cautiously shorting and taking profit as we go, because there are still a lot of bulls in the market. So, you know, the ratio is probably something like 60-40, 60% bears, 40% bulls, as opposed to just a full bear market. There's plenty of bulls that will step in at those key levels. Right, and then so on that note, let's just head back to the slide and just have a look at this and just recap quickly. In terms of what was on the agenda, we covered every single market asset class, the biggest movers, cautions, where to trade and not trade. There's some good currencies, some good commodity trades, and then very, very cautious on those global indices that are looking very volatile and slightly more bearish than bullish, and highlighting those potential trading opportunities, I said, even on UK oil at the moment. So why choose ATFX? Obviously award-winning, they're regulated by the FCA, so there's the license number if you want to check that out. Easy to transfer in and out of the account. Committed obviously to providing competitive pricing for clients. Platform obviously is very reliable, been around for a very long time, easy to use. It might not look that pretty and look that friendly, but it is very easy to use and very stable. And of course, good bespoke high-class customer service. So these are the contact details. I just want to be aware of the time. We're exactly on time. And I do hope that you enjoyed yourself this evening. Thank you for being patient with me. Apologies for the puppy. I got rid of it at the end. I mean, I just got someone to come and take it. And I want to thank you for your patience. I do hope that you enjoyed this and you found it instructive and useful. This was technical analysis and technical trading. This is what we do. And it was a pleasure. So thank you very much. I love the interaction. These are the contact details. If you do have any questions, please feel free to contact the lovely folks at ATFX. And I was also going to say, I do look forward to seeing you. I'm just scanning the names. I do look forward to seeing you in future webinars. And please feel free to, these are free webinars and you get access to traders. So please feel free to join as often as possible. And if there's anything you want us to have a look at, just type it in the questions box and we're more than happy to do that for you. Okay, so again, thank you very much. I'm going to end the webinar now, which is going to hoof all of us out. And I want you to go and have a fantastic evening and a great weekend and a great summer, depending on which side of the world you're in, which time zone, or at least which hemisphere. And thank you very much. And I will hopefully see you in future webinars. So thank you.